Okay, so when it comes to candlesticks, as traders, we want to read candlesticks to discover currency pairs, future long strength and future short strength. Okay, so take this diagram right here. So a price action trader reads a candlestick to discover a currency pairs, future long strength and future short strength. Okay, and remember, in price action trading, we're always trying to find out how much future long strength and future short strength there is on a currency pair. All right, so now let's go on and define what a candlestick is to begin with. Okay, so at the basic level, a candlestick visually represents price activity within a given time period. So right here, we have a 5-minute candle. And what this 5-minute candle represents is what happened with price during those 5 minutes. So let's go ahead and break down 5 minutes with 1-minute increments. Okay, so on the first minute, price opened at this level right here and reached all the way up to these levels right here. And then on the second minute, price kind of zigzagged around and came up to these levels. And at this point, actually reached the highest price level within 5 minutes, right? Because price never came above this price level. Okay, and then on the third minute, price came all the way down to these levels right here and actually made the lowest point within this 5 minutes. And then on the fourth minute, price kind of just hovered around up to here. And on the fifth minute, price came up and closed at this level right here. Okay, and what a candle can tell us simply by looking at it is the price level that price opened at in the beginning of those 5 minutes. And it can also tell us the highest point that price reached within that 5 minutes, as well as the lowest point right here. And finally, it could tell us the price level that price closed at in the last minute of those 5 minutes, which is right here. All right, so just by looking at a candle, it could tell us the open price, which is right here. It could tell us the close price right here. It could tell us the highest point that price reached within 5 minutes, as well as the lowest point. Okay, now here's a really important point. Now, candlesticks are very useful. However, a candlestick does not tell us anything about how price zigzagged right here, or how price on the fourth minute came up to these middle levels right here, or moreover, whether this high point was reached before this low point, or vice versa. Okay, so it's important to know the limitations of candlesticks. And just remember that the basic information that a candlestick can tell us is simply the open, the close, the high, and the low. Okay, and moreover, just as an added benefit, a candlestick's color can tell us if price closed above its open or if price closed below its open. Okay. All right, so in this case, I'm using the color green if price closed above its open, and the color red if price closed below its open. Now, of course, you could change these colors to purple or neon or whatever color you want. However, I recommend green for close higher than the open and a red color for close lower than the open, because I would say about 90% of all traders in the world use this color coordination. Okay, but that's strictly up to you. Okay, so now let's go ahead and look at this 1 hour candle. Okay, so let's take this 1 hour candle and divide it into 30-minute increments. So on the first 30 minutes of the 1 hour, price opened at this price level and also made its high. And now the next 30 minutes, price made the close at this level, as well as having the same price level as the low. Okay, so we can know the open, close, the high, and the low just by looking at this candle. Okay, so first of all, since this is a red candle, we immediately know that price closed below the open. And we also know the high at this point right here. Right, that correlates to this point right here. And we also know that the lowest point within this 1 hour is at the same price level of the close right here. Now, if the low was at a lower level, say around here, well, then we'll have a little line on the bottom of this candle. Okay, but again, you want to remember the limitations of candlesticks. All it really tells us is the open, close, high, and the low. It does not tell us whether the low was formed before the high or vice versa. And it doesn't tell us anything about how price moved in these areas. Okay, so now let's go into a little bit more detail of candlesticks, as well as some terminology that's commonly used. Okay, so basic extracted information, not reading price. All right, so at this point, you want to remember when we're talking about the basic information that a candlestick can tell us, this is not considered reading price at this point yet. So in other words, the basic information provided by a candlestick does not tell us anything about the future long strength or the future short strength of a currency pair. All right, so let's go over some basic terminology. All right, so the area between the open of a candle and the close of a candle is referred to as the body. Okay, so this area right here will be the body. And then moreover, these two lines that are sticking out of this body are referred to as wicks. And these are the elements of a candle that actually tell us where the low point was and the high point was within a given time period. Okay, so let's go over the basic extracted information from a candlestick. Okay, so let's say this was a 5-minute candle. Now, because the color of the body is green, we immediately know the close was higher than its open, right? So in the first minute of this 5 minutes, price opened at this price level right here at $2. And then moreover, somewhere within 5 minutes, price reached a high of $5 right here. And then moreover, reached a low of $1. And you want to remember, this candlestick does not tell us which one came first. The low could have been hit before the high. Okay, but ultimately within the last 5 minutes, price came back up and closed at $4 right here. Okay, so let's go on to this one right here. Now this is a 1-hour candle. Now since this candle's body is red, we immediately know that the close was at $3 while the open was at $7. Okay, so in the first minute of this 1 hour, price started at the $7 point, and somewhere within this 1 hour, price came down to $0 and came up to $10, while ultimately closed at $3. Okay, so again, it's very important to understand the limitations of candlesticks in terms of the information it could provide us. All it tells us is the open, the close, the high, and the low. Okay, so now let's go into actually reading price, or in other words, figuring out how much future long strength or short strength there is by reading candlesticks. Okay, so single candlesticks, extraction of future long and short strength. Now at this point, we're going to start talking about actually reading price. Okay, so first we have a candlestick that's referred to as the doji. Okay, so starting from the basic information, now since this is a 1 hour candle, and moreover since the body is green, we know the open is at this level right here, and the close is at this level right here. And then moreover, we know that at some point within this 1 hour, price reached this high right here, as well as this low right here. And now in terms of future long and short strength, the doji shows that there is an equal amount of future long strength and future short strength in the next move of a currency pair. Okay, so let's go ahead and decipher what happened on this doji. So after price opened at this level right here, at some point within 1 hour, the buyers were able to push price all the way up to these highs right here. However, at this price level, the buyers were overwhelmed by the sellers and price was pushed all the way back down toward this close. And then moreover, within that 1 hour, the opposite was also true. So sellers were able to push price all the way down to these price levels right here. However, by the end of this 1 hour, the buyers were able to push price right back up near these close levels again. which tells us that within this 1 hour, there were equal amount of buyers, as you can see here and here, and there's an equal amount of sellers, as you can see right here and here. And thus there is both future long and short strength in the next move of a currency pair, and thus tells us that there will be neutrality in the next move. Okay, so in order to locate a doji, here's some things you want to be looking for. Now, first of all, you want to make sure that the body of the candle is as thin as possible. Now, in this case, the thinner the better. So if this body was only this big right here, that's even better, right? Because that shows us that even in terms of the open and close, there's the same amount of buyers and sellers, and thus right up to the end of this 1 hour candle, thus showing even more neutrality. Okay, so you always want a thin body for a doji. And then the other element you want to look for are roughly even wicks. Now again, this is roughly speaking, so it doesn't have to be an exact science, but we want the wicks on both sides to be as even as possible, showing that neither buyers or sellers were able to push price down lower than the other side. Okay, now again, in terms of future long and short strength, a doji shows that there is neutrality in the next move of a currency pair. All right, so now let's go on to the hammer. Okay, so on this 5-minute hammer, price opened right here and closed right here. And moreover, the high was right here. And the low was at the same level as the close, right? Because there's no wick on the bottom. Okay, so let's see what happened here. So price opened at this price level right here. And somewhere within 5 minutes, price was able to reach this high right here. However, the sellers were able to push price all the way back down right up to the last minute of that 5 minute and making a close at the same level as the lowest low of that 5 minutes. Okay, and so this red hammer shows future short strength in the next move of a currency pair. Okay, so let's look into what happened here. So when price opened at this level right here, at some point within 5 minutes, there was a lot of buying pressure here, pushing price all the way up to these levels right here. However, by the end of that 5 minutes, the sellers were able to overwhelm those buyers and bring price down and close at the lowest point of the 5 minutes. Okay, and a hammer can also be used to provide future long strength, right? So you just have to reverse this. So if you want a hammer that shows future long strength, you want a green body with a very low wick on the downside. Okay, so here's the key elements you want to be looking for in order to locate a hammer. Okay, so first of all, you want a long wick on the opposing side in which future strength is created. So if you want future short strength, we want the wick to be on the top side and be as long as possible. Now, the longer, the better in this case. Okay, moreover, we want a red candle if we want future short strength, and we do not want a wick on the bottom side. Now, there can be a small wick. However, we want this wick to be as small as possible, and preferably having the low at the same level as the close. All right, so now let's go on to the full candle. Okay, so this is a 15-minute candle. Let's go on and see what happened with this. So price opened at this level right here. And at some point within these 15 minutes, the sellers were able to push price down to this low right here. However, by the end of that 15 minutes, the buyers were able to push price all the way up, way past the open, up to these levels right here, and close at the highest level that price was at during that 15 minutes, right? Because there's no wick here. And showing us that although price opened at this level right here, all the way up to the last minute of the 15 minutes, the buyers are willing to buy at much higher levels, way up here. And moreover, there were no sellers at this point to bring price down, and thus there's no wick on the top. Now this green full candle shows future long strength in the next move of a currency pair. Okay, and the opposite is true also. And so if we were looking for short strength, we want the body to be a full candle. And moreover, we could have a wick on the top end this time and little to none wick on the lower end. Okay, so here's the elements you want to be looking for in order to spot a full candle. Okay, so when it comes to full candles, it's really all about the body. So we want a big body, showing that buyers are willing to keep buying at higher levels. And again, we want little to none wicks on the top end, showing that sellers are not able to push price down at these higher levels. Okay, and in terms of the lower sides of wick, now this is optional, however, the longer the better. Showing that although price did reach lower levels, the buyers were able to push price right back up. Okay, but that's optional. Okay, so now let's go on to looking at some real chart examples of these single candlesticks. Okay, so this is the pound dollar monthly chart. So first of all, we got this candle right here. We got a nice hammer that shows future long strength, showing that during the month of May right here, all those sellers were able to push price down all the way down to these levels. But by the end of May, the buyers were able to overwhelm those sellers and bring price right back up to these levels right here. Again, showing future long strength in the next move. Okay, then we have a hammer to the downside right here. All right, so this month was a hammer month. And really just by looking at this candle, you could basically get an idea of what happened in that entire month, if you know the basics of candlesticks and the basics of reading price. Okay, then we have a doji right here on this month right here. Now, although the wicks on both sides are not even, again, this is not exact science. So you just roughly want it to be even. Okay, so in this month, just by looking at it, we knew that there's both future long and short strength in the next move of this currency pair. Right, and then we got a hammer right here showing future long strength. Right, and then on this month right here, we actually got a full candle. Right, we have a big body. We have a minimal wick on the top end. And this shows us that buyers are willing to buy at higher prices, making the open and the close very wide and thus having a big body. And moreover, sellers were not able to reject price down effectively. Right, and this shows future long strength in the next move of this currency pair. All right, moreover, we have another doji and another doji right here, both showing neutrality in the next move. Okay, so especially on the higher time frames, really just looking at a candle, and if you understand the basic extracted information of a candle, as well as if you know the basics of how to read price, well, just at a glance at one candle, you could tell what happened during that entire month, literally in a couple seconds. Okay, so those are the single candlesticks that can be used to read price and thus know how much future long or short strength there is on a currency pair. So in theory, we could trade in that direction. Okay, so now let's go on to candlestick patterns, where we use a combination of candlesticks to extract the future long and short strength of a currency pair. All right. Okay, so candlestick patterns, extraction of future long and short strength, reading price. Okay, so now we're going to use multiple candlesticks together to extract future long and short strength. So first we have this engulfing pattern. Okay, so let's say these are both 5-minute candles. Okay, so on this first candle, price opened at this level right here, and somewhere within 5 minutes reached the high of this level, the low of this level, ultimately closed at this level right here. Okay, and for the engulfing pattern, you want to pay attention to the size of the body. So notice this first candle's body is roughly half the size of the second candle's body, correct? And then on the second 5-minute candle, price opened at this level right here. And somewhere within 5 minutes, price reached this high, but was pushed right back down, all the way down this price level right here where the low and the close is. So looking at both these candles in more detail, you notice on this first candle that the buyers were only able to push price up until that last 5 minutes up to these levels, because this wick shows us that the sellers were able to push price back down at the end of that first 5 minutes. However, on this second candle, the sellers were willing to keep selling all the way down to these levels, roughly twice the size of this first 5-minute candle. And then moreover, close at the lowest level that price got to within 5 minutes. Now this abundance of sellers in a range much larger than this initial candle is the engulfing pattern. And this shows future short strength. Okay, and again, if you want future long strength, well, you want the opposite to be true. You actually want a small body red candle and a big body green candle combination. Now this will show future long strength. Okay, now here's the things you want to be looking for in terms of spotting these engulfing patterns. Now, like I mentioned earlier, in terms of engulfing patterns, it's really all about the body. So the initial candle's body, ideally speaking, wants to be about half the size of the second candle. Okay, but again, this is roughly speaking. So for example, even if the first candle is about 70% the size of engulfing pattern, well, that will still qualify as an engulfing pattern. Okay, but the other thing you want to be looking for is that on the second candle, you want minimal to no wicks on the lower end, showing that sellers were able to sell right into the close of that 5-minute candle. Okay, now and again, this engulfing pattern right here shows future short strength in the next move of a currency pair. Okay, so now let's go on to consecutive dojis. Okay, so let's say each one of these candles are 30 minutes. And like we did in the previous slide, these are all just dojis, however it is grouped together consecutively. All right, so let's kind of decipher this. So seeing how each one of these bodies are very thin, that shows that price on each one of these dojis, that it cannot close at a big distance. So even if price came up to these levels, the sellers were pushing price right back down to close at these levels, right? The same goes for this one. The sellers were able to come down to these levels, but the buyers came right back up to close at this level right here. Now, the difference between single candlestick dojis and consecutive dojis is that this tells us that in the next move, there's going to be an extreme amount of strength in whichever direction that price goes. Okay, so all those single dojis only tell us that the future long and short strength is equal. The consecutive dojis tell us that the next move, whether long or short, will be extreme in quality. Okay, so here's what you want to be looking for in terms of consecutive dojis. So if you want to spot these consecutive dojis that create extreme strength in either direction, it's all about how many there are. So think about it this way. The more dojis there are consecutively, the more pressure it creates. That becomes the power that drives that extreme move, whether long or short. Okay, and another thing to keep in mind is that right here, there's 3 green candles and 1 red candle, but the color in this case does not matter. I mean, these could all be red candles or all be green candles. It does not matter. Okay? All right, and finally, let's go on to consecutive rejection candles. All right, so both these candles are 1-hour candles. Let's go ahead and see what happened on these candles. All right, so price opened right here, and somewhere within 1 hour, the sellers were able to drive price right back down to these levels. However, by the end of that 1 hour, the buyers came right back in to drive price right back up and close at higher levels, and thus creating a long wick on the downside. Okay? And then in the second hour, what happened is that price opened here. And at some point, the sellers were able to drive price all the way down to these levels. However, by the end of that 1 hour, the buyers were able to drive price right back up to these higher levels right here. And again, creating a long wick to the downside. Now, these consecutive rejection candles create future long strength in the next move of a currency pair. Okay, and if you want future short strength with consecutive rejection candles, we want consecutive candles that have long wicks on the top side. Okay, and in order to spot these consecutive rejection candles, first of all, the color is of no consequence of the body. Rather, you want to pay attention to how long the wicks are on the bottom side in this example right here. And the longer, the better. Okay. And the other thing you also want to be looking for is that the more consecutive rejection candles you get, the more it confirms legitimate consecutive rejection candles. Okay, so now let's go ahead and look at these on a real chart. All right, this is the pound dollar daily chart. Okay, so right here, we had an engulfing pattern right here, right? You can see how the second candle is larger than the first candle. In this case, although the first candle is about 70% the size of the second one, again, although you want the first candle to be only 50% of that second candle, now that is a rough statement. And I would say the first candle being 70% of the second candle's body will do. Okay, so this engulfing pattern shows future long strength. And then at this point right here, we've got another engulfing pattern. And what you want to notice right here is that this first candle is about 80% of the second candle. However, the reason why this will qualify to me as a legitimate engulfing candle was because of the other elements of these candles. As you can see up here, the second candle did not have a wick on the top, showing that the buyers were able to push price right back up into the close of this daily candle, which actually adds a little legitimacy to the engulfing pattern. All right, so in this way, you also want to look at the secondary dynamics of these candle patterns to confirm its legitimacy. And I'll go over that a little bit in the latter part of this lesson. And then right here, we have consecutive dojis, showing that the next move is going to have a lot of strength in it. Okay, and then we got another engulfing pattern showing future short strength. Let's keep going. And then moreover, we have these consecutive rejection candles right here. As you can see, who has low wicks on the bottom end consecutively, which shows future long strength in the next move. Okay. And at this point right here, we actually have two daily rejection candles to the downside, showing future short strength. And then right here, we actually had three consecutive rejection candles that show future long strength. Okay, so let's go back to the slide. Okay guys, so now that I showed you the single candlesticks and the candlestick patterns, I want you to understand that there's actually more candlestick patterns out there that by theory predict the future direction of price. However, like I explained in lesson 1, I'm only going to show you the patterns that I found to be most effective in accurately and effectively extracting the future long and short strength. And although there are a couple more that I do use personally, at the basic level, these candles are enough when used in combination with other price action methods that gauge future long and short strength to reach efficiency in trading. Okay, and so now let's go on to how you want to use what I taught you with single candlesticks and candlestick patterns in actual trading. Okay, so at a basic level, use candlesticks at key levels to decide whether to add or deduct future strength. Okay, so when it comes to candlesticks, the amount of future long and short strength is minimal compared to the other elements that can provide future long and short strength. So for example, trend lines and gaps provide much more future long and short strength than candlesticks. Okay, and if you don't understand how to find trend lines and find legitimate gaps, please watch my price action trading course for the intermediate trader. Okay, so what I mean by only using candlesticks at key levels is that let's say price is falling in this area right here. Okay. Now, since there are no other elements like trend lines and gaps that can provide future long or short strength, at the basic level, you don't want to use candlesticks to derive the future long and short strength simply because it's too weak to do anything. So again, as price came down to these levels and there were no other price elements that provide strength, you don't want to use the candlesticks. Okay, so let's say price bounced right here and came all the way down to these levels, where actually there was a legitimate trend line that actually creates future long strength. Now at this point right here, in conjunction with the trend line, you want to start using these candlestick patterns to either add or deduct future long strength in this case. Okay. So let's say at this point right here where that other trend line is, which shows future long strength, there were consecutive rejection candles. Okay. Now this would actually add future long strength in conjunction with this trend line right here. Okay. However, let's say that we did not get rejection candles that show future long strength and instead got rejection candles that show future short strength. Now, in that case, you actually want to subtract strength from the long strength that was formed from this trend line. Okay, let's keep going. So let's say price bounced right here and price came up to these levels. Well, there was actually another legitimate downward trend line right here. And let's say price bounced off a little bit and then we got a nice engulfing pattern that shows future long strength. But in this case, let's say this trend line was showing future short strength. Well, in that case, since this candlestick pattern of a engulfing pattern shows future long strength, we want to subtract this strength from the future short strength that this trend line creates. So in other words, this engulfing pattern actually weakens the short strength created from this downward trend line. Okay, then let's say price keeps going up in all of these areas, since there are no other price elements that show any strength in either direction, we're not going to pay attention to candlesticks at the basic level. Then price reaches this gap right here, which actually shows future short strength. However, let's say we got multiple dojis forming right here, showing that the next move, whether long or short, is going to be extreme. So since consecutive dojis do not show any future long or short strength individually, however, it does tell us that there's going to be a lot of strength in the next move. So in this case, we're not going to deduct any future short strength from this gap. However, we can expect prices coiling or creating pressure to get through this gap level. So in other words, we could expect that price will continue rising through this gap. Okay, now let's say price does get through, reaches this level right here, or let's say we get a nice hammer that shows future short strength. Well, in this case, since this trend line right here originally shows future short strength, we would then add more future short strength because this hammer also provides short strength also. Okay, so using candlesticks at the basic level should be used in conjunction with other price elements that show future long and short strength. Okay, but that said, at higher levels, you can also use candles in different situations, like in these areas right here where there's no other price elements. And I'll get into that in this course. Okay, so finally, I'm going to go over the key elements of each candlestick pattern that you want to look for in order to confirm its legitimacy. And moreover, explain how you could find the detailed strength of each candlestick pattern. So in other words, I want to explain to you how you can find how much strength short this hammer formed, or how much long strength consecutive rejection candles formed, long in this case. Okay, because there are degrees to this. All right, so let's go and look at that. Okay, so single candlestick strength ranking. Okay, so for the doji, that shows the next step will be neutral, right? Now the question becomes, how neutral? Is it strong, medium, or weak neutral? So the first thing you want to look at is the ideal. So a strong doji that shows strong neutrality is going to have extremely even wicks. And moreover, the body will be extremely thin. And the more precise these two elements of a doji are, the stronger the doji is, and thus the stronger the likelihood of neutrality in the next move. Okay, so in other words, let's say this upper wick was like double the size of the bottom wick right here. Well, that'll make this doji's neutrality into about a medium strength. And moreover, let's say along with this uneven wick, we had an even bigger body. Now, although this is still a doji, that's going to be a weak doji, showing weak neutrality in the next move. Okay, let's go on to the hammer. So in order to get a strong hammer, which shows strong future short strength, first of all, we want a very long wick on the top. Now this is the longer, the better. And then moreover, we want the low and the close to be at the exact same level. Now that will create strong future short strength. However, let's say this upper wick was about half the size, but it does have the same price level as the low and the close. Well, that'll be at about medium future short strength. Okay, and moreover, let's say there was actually a wick on the lower end right here. Not that big, but there is one there. Well, then that will devalue this hammer's future short strength into weak future short strength. Okay, so now let's go on to the full candle. All right, so a strong full candle that shows future long strength in this case is a huge body. Now, what I mean by huge is that we really just have to compare it to prior candles. So if a body of a full candle is obviously larger than other candles prior, well, that will fit the criteria. And then moreover, a strong full candle would have a close and a high at the same level. That will create strong long strength. Okay, but what would make this weaker is, first of all, if the body was smaller relative to prior candles, or moreover, if there's a wick on the top. That will decrease the future long strength also, making it possibly into a weak full candle. Okay, so in this way, it's important to understand these dynamics also, because in real trading, it's actually pretty rare to get these perfect exemplary single candlesticks. Okay, so now let's go on to the candlestick patterns strength ranking. Okay, so candlestick pattern strength ranking. Okay, so engulfing pattern. Now, a strong engulfing pattern that shows strong short strength in this case are two elements. Now, first is the body size. So the larger the size difference between the first and second candle's bodies, the better. Now, in this case, since the second candle is about 50% bigger than the first candle, that will qualify for strong short strength. And moreover, since the low and the close is at the same level, again, this engulfing pattern provides strong short strength. Okay, so what will make this a weak engulfing pattern is, let's say if this first candle's body was about 70% of the second candle. However, this time, if the second candle had a small wick on the bottom side, showing a little bit of the buyers coming back in at lower levels, well, this will become a weak engulfing pattern that shows weak future short strength. However, let's say there was no wick right here and the low and the close was at the same level, well, that would be about a medium strength engulfing pattern. Okay, so when it comes to these patterns, there's a couple more dynamics you have to pay attention to, and the range between the strong and the weak patterns become more incremental. And if you have a question about these, please let me know in the comment section. Okay, so let's go on to the consecutive dojis. Okay, so consecutive dojis are rather simple. What makes this a strong consecutive dojis really is simply the amount of dojis there are. But at the bare minimum, I will want about 3 dojis consecutively to at least make weak pressure for the next move. Okay, so that one was easy. Now let's go on to consecutive rejection candles. Okay, so strong consecutive rejection candles in this case, showing future long strength, is first of all the color of the bodies. So if you want strong future long strength, you want all the rejection candles to have green candles in this case, because we want future long strength. And then moreover, the wicks on the downside is the longer the better. But I would say a wick length about 3 to 4 times the size of the body will qualify for strong long strength. Okay, but you want to remember it's all relative. So there's 2 elements that could either increase or decrease the future strength, right? So even if these consecutive candles had a red candle in it, if that red candle's lower wick length is extremely long, well, that would actually qualify for strong long strength also. Okay, and in order to get a weak long strength, that's if the colors of the body are in the opposing directions. So in this case, if we had a red body right here and another red one right here, well, that will devalue the future long strength into about a medium. But let's say, moreover, these bottom wicks were only about this long, about double the size of the bodies. Well, that would actually decrease this future long strength into weak future long strength. All right, so here's the key takeaways for this lesson. Number one, it's important to know the limitations of what basic candlesticks can tell us about price. And you want to remember that what basic candles cannot tell us about price, for example, whether the high was made before the low or vice versa, or even the incremental movements of price within a given candlestick, are both valuable information in terms of reading price at the higher levels. Okay, number two, measuring the future strength of candlesticks and candlestick patterns is not an exact science. So the initial goal in measuring future strength with candlesticks is to first become familiar with the dynamics that produce future long and short strength, and then use that knowledge to measure future strength at a detailed level. And so remember, measuring future strength is more of an art than a science. Okay, number three, at the basic level, candlesticks should only be used to measure future strength in conjunction with other price elements. But beyond this basic level, know that candlesticks can eventually give the trader sharper entry points and can even be a tool to manage a trade's targets, stop losses, and entries. And when it comes to candlesticks at the higher levels, you want to eventually be able to read candlesticks in order to have a constant grasp of the future long and short strength of an asset at all times. Okay, so that's it for this lesson. If you have any questions about this lesson, please leave it in the comments section. And I hope you guys have a great day, guys. Okay, bye.